Good morning,
Hello,
or afternoon, I suppose.
afternoon to me, good morning to you. Hello.
Hello there.
Hi.
How are you?
I'm very fine, thank you.
Excellent.
Here. So Sylvia's Traders Lounge is delighted and honored to have you on this podcast. Brynne Kelly, I'm going to start by introducing you to our audience by reading your bio, and then we can dive right into the questions. Okay?
Okay, yeah. Is this live podcast or recorded?
Recorded, and then it will be online in the next 2 days or something.
Okay, all right. So you just want to jump right into it then?
Yes, if that's
Oh,
okay.
okay. Yeah, sure.
Okay, so Brynne Kelly is the founder of the Fundamental Angle, an analysis and consulting company that leverages her 25 plus years in the energy industry. She has served in leadership roles on merchant trading desks for some of the world's leading energy conglomerates, managing large portfolios ranging from 100 million US dollars to over 1 billion US dollars. In addition, she has managed portfolios for large hedge funds. She has large hedge funds and unregulated subsidiaries of large electric utilities, and designed software applications for a leading ETRM software provider. She is passionate about understanding markets and what influences them. Her background makes her a natural fundamental trader due to her deep-seated experience in the merchant energy business. Welcome, Brynne.
Thanks for having me.
So we're going to start by you telling us about the genesis into your trading journey and finding your niche in the energy trading.
Sure. Well, I tell this story a lot, it seems, lately, and so I try to figure out how to make it a little bit shorter. If I really were to think about it, I would say it always starts with a luck break, and then it comes to what you of it. By that is, I graduated from college. I went to the University of Minnesota here in the United States, and I had a finance degree. And once I graduated, I got my first job at Cargill, which is the global agriculture, I would say, it's the largest privately held company in the world. And at the time when I got hired, the way it worked is that you were just placed, happened to get placed in their trading group. So it was a big division in Cargill that focused on financial trading. Wasn't really in commodities. It was more baskets of stock and debt and equity. And the thing for me is that I hadn't grown up around that. My father was an accountant. I didn't know anything about this world of trading. And it was so fascinating. I loved it. And that was my lucky break, that I got placed in that group. Therefore, I found out this career called trading. And then I pursued that career. And, I had to make a lot of different moves and move to a lot of different companies in order to, push my way up the ladder. Since my first job, I, started really in the back office. So just doing data entry, whatever entry-level job type work is, that's what I did. And you really have to get out there and differentiate yourself in order to push yourself onto the trading desk. And so from there, I ended up, after a series of other moves, I ended up at Koch Industries, which is coincidentally the second largest trading or privately held company in the world. But they were heavily involved in energy and crude oil. And I got to work in their supply and trading group, which was their trading group of all the energy products, crude oil, gasoline, feedstocks, you name it, anything having to do with crude oil. And I finally, got my break working with a lot of the trading side at Koch Industries, and then was able to leverage that into my first job managing an entire trading portfolio for a subsidiary of an electric company. And I'm not sure if you guys have power pools over there, or if you're dealing with the whole unregulated or regulated power markets, but this was in the 90s, and the US power markets were just going through deregulation. And so there was a lot of new companies entering, a lot of utilities separating off unregulated subsidiaries to be able to trade electricity. And it was the Wild West. It was really fun. Since it was so new and the market had not been deregulated, there was a lot of opportunity to find inefficiencies among different markets. And that ended up being my favorite part from then on out. I went from there to work for BP in their electricity and gas desk. I worked for a number of other electric or merchant trading funds. I worked for a hedge fund in New York City. And the thing about all of those jobs is that they were within merchant trading desks. And what that means is that you're focused more on the logistics of the market. So moving product from one market to another. And by doing that, you understand the relationships between prices. And it gives, I think it opens up, for me, it gives me a lot more opportunity as far as how to express trading opinions. So anyway, long story short, I got a lucky break, and I worked really hard once I got it in order to make the most of it.
Okay, so when you were starting out, did you know you would end up in energy trading, or were you
No.
the exposure that you had, was that what led you into energy trading?
Well, so after Cargill, like I was living in Minnesota. I graduated from the University of Minnesota. I lived there. And then I had an opportunity to transfer down to Wichita and with Koch Industries. And when I joined that company, that's when I moved into energy. So prior to that, and that didn't happen until maybe 1997. So prior to that, I didn't know that really that world existed. So it started that I when I was at Cargill, I really didn't understand what trading was professionally, let's say, because this was really before there were online trading platforms as there are now. So that's how I learned about trading. And then I learned about trading energy in my job at Koch. That's where I've stayed ever since, is trading.
In your bio, you're the founder of Fundamental Angle. So do you combine fundamental analysis with technicals, or you just use pure fundamental analysis in your, say, style of trading?
Well, that's a really good question. So, and I think there are people, it's a good idea to figure out what type of trader you are. I consider myself a fundamental trader that executes based on technicals. And what do I mean by that? Since my background is fairly deep in understanding the fundamental drivers of, let's say, crude oil, for example, or natural gas. Since if you've worked in the business of moving oil or gas on a pipeline, blending components into a final product, pricing and structuring long-term deals with various grades of crude oil or various timing, you come from the fundamental side because you understand what is causing prices to be where they're at, because it's related. Gasoline is related to crude oil, is related to heating oil, and if you're physically out there refining a barrel of oil, you understand all of the relationships to its products and how one price doesn't move without the other price moving. That being said, when I identify an opinion, well, when I develop an opinion or I identify a strategy, I certainly pay attention to fundamentals when I look to execute that strategy. So a simple example is just, let's say I wanted to go long Brent, short WTI, crude oil. I certainly would look at the chart and see if, maybe it's at an inflection point and I probably should wait till tomorrow to put that trade on. But technicals aren't my starting point.
Okay. So you combine both, but you're more geared towards what the fundamentals tell you.
Yeah. And one more thing on that. I mean, for me, I feel like if you're purely a technical trader, you don't care what you're trading. I mean, it just doesn't matter. You could trade corn, you could trade sugar, you could trade Apple stock. It doesn't really matter because you're just looking for indicators, chart indicators, and liquidity.
Yes.
And I prefer to know more about and dive deeper and know, what it is that I'm trading. And that's just preference. One isn't better than the other. It's just, it's better to do what you like.
Okay, so you talked about oil and natural gas and the kind of commodities that you trade in the energy sector. And we do know that there's a high correlation between oil and the Canadian dollar. And because the US imports most of its oil from Canada, then the US dollar is also by extension tied to the Canadian dollars. So I don't know if you trade currencies, but if you do, what would you tell and advise us from your experience on how these two instruments are tied to oil?
Yeah. So I don't specifically trade currencies very often, but that's not to say that I'm not aware of that relationship. I think it certainly exists because of the flow of oil back and forth over the borders. I would say for me, when I look at that relationship, I either try to find out if the correlation is breaking down or if it's getting stronger. So how the relationship is behaving is what's important to me and what I look at. But when it's so highly correlated, what's the point of trading it? I mean, the only reason you trade something is that you're hoping that it breaks its correlation, right? Or it makes a move. I mean, if you are buying something, you want it to go higher, right? And you're selling something, you want it to go lower. You don't want it to stay where it is. So relationships that are very highly correlated, they're almost not even indicators unless you drill down into the microseconds of the day and when one might move quickly before the other. But on an overall basis, it's more interesting to me when its relationship is changing from how it's been.
Okay. So since you have managed like huge portfolios, from 100 million to 1 billion, that takes a lot of professionalism and expertise. What would you tell us is your edge and what has worked for you over the years? And following that question, there's one of our lounge members who asked me to ask you if there's any possibility having an edge in energy trading, because they've tried it before and it's not been working out for them.
Yeah, let's see. There's kind of a lot in there. So I would say anybody just trading, let's say you're trading on your own. Let's start with that. I think it's very difficult to get any edge in the market. And I say that because the markets are very, they become very technical and automated. And you're basically, as an individual person, going against companies that have invested a lot of money in technology and the ability to process and execute trades faster than you ever could by yourself. My edge, I feel, has always been that I recognize that, and I certainly don't try to fight and think I can win on my own against machines. I believe you maintain an edge by having access to markets that not everybody else does. So, for example, when people look at crude oil, they might look at Brent futures contract or the WTI futures contract and look at that alone. And there's really no edge in that price of that single contract. The more you can know about all of the other markets that flow into Cushing, the more edge you have. So for example, if you understand what trucking rates are between Midland, Texas and the Gulf Coast, or you understand what the pipeline constraints are on any given day from Canada down in through Chicago. If you see that there's all of a sudden an inability of a particular area to store additional volumes, or they're having problems with their operations and they can't run maximum quantities on a pipeline. The more you can get involved in the one-off information, if you drill down lower, the more edge you have against people who are only looking at a single thing. And, in some ways, I think a way to look at it would be like if you look at the S&P 500 futures, right? So a lot of people trade the S&P futures.
Yes.
But it's an index made up of 500 individual companies. You could argue that the more you know about each sector that makes up the S&P market index, the better you might be at having a position an opinion on which direction the S&Ps are going to go. Versus if you're just somebody with a brokerage account only looking at S&P futures, pointing and clicking and thinking that you have some edge based on a chart pattern. You don't, because someone always has more money than you and better technology. And so you haven't invented anything, particularly special with a chart pattern. If you found a good one, someone else has already found it. And I think if you look over time, you find out that it's not any particular edge per se. An edge becomes in when you have an advantage over the general market. And I don't believe I can get that edge through technology or better ability to read charts. I lean more heavily towards knowing more about the underlying pieces that make up a particular index or a commodity. Because really, a WTI, crude oil, or Henry Hub natural gas, even S&P 500, it's just a clearing price that reflects the total of all its individual components.
Okay, so in other words, you're saying that having other additional information related to whatever it is that you're trading, in addition to what is provided by, say, the fundamental news, economic calendar, and what have you. That's what you're saying.
Yeah, you got to get your hands dirty, right? So, the trading career is it's such a diverse set of roles. You could start on a trading desk in energy as a scheduler, where you're moving oil, you're scheduling and nominating gas or oil on a pipeline, and you really understand pipeline, deadline cutoffs for submission of information. What happens if a pipeline cuts your movements of the product, and how that ultimately gets resolved. And once you become a master in that, you might move to maybe someone who does daily P&L for trading groups, or somebody that is, marketing to a particular client base. maybe you move into some of the software applications, sales, or, you think there's companies out there that monitor flows of energy around the world. You need to build yourself a portfolio of experience that ultimately allows you to understand and have a better perspective, and then you know what information to look for. It's hard to just sit down, get a book, and have the information. It's a curation of experience, and I'm saying that because it's very valuable.
Okay.
Or somewhere within the food chain in the trading world, because that's what ultimately people will value, is the summation of all of that experience, because you can only get it by doing it.
Yeah, and aligning yourself to, kind of similar people in the same industry. I think that should also help. If you don't have much experience.
I mean, in these big groups, or you're working on a trading desk, I mean, by default, you have a peer group, and you find out how different people approach the market, and you fight with each other, and you are competitive, and those kind of all push you forward.
And what was that like for you? Did you have like a trading mentor, or you just, did it all by yourself?
I did not have any particular formal trading mentor. It's a very cutthroat business, and there's a lot of tough times that you have to go through. I would say I had two really great bosses that I respected and would kind of try to turn to for advice, and used, I would say, maybe as a sounding board or a mentor. I think a mentor is a good idea if they are been in that role. It doesn't have to be somebody who currently was, right? I mean, I have been providing some mentoring to people now, and really it's only because I have the experience, right? And people want to kind of understand how something will play out from my point of view. But it's I'm not gonna lie, right? It's cutthroat, except for that it's so competitive, and I'm so competitive that it was a good fit. And so that worked. Again, goes back to being lucky. Like, I found something that fit my competitive nature.
Okay. So when it comes to energy, we can have some external forces or weather conditions that might affect the supply of, say, electricity or gas, for example. And
yeah.
I know, like, for your case, maybe it's not so common to have like blackouts and everything, but because, for example, in my country, the company that regulates electricity supply is only one, so it's kind of a monopoly. So when there's a blackout, it tends to go on for long hours. So if, for example, you found yourself in such a situation, how does that affect your trades, if that has ever happened?
Yeah, no, I mean, and you phrased that really well, and I think I can relate that, and it has happened, in the U.S. in the form of hurricanes usually. So I think there's kind of two ways to look at an event that impacts the supply or demand of a commodity, right?
Yeah.
It's either is the event something that is curtailing the production of the commodity, or is the event something that impacts the consumption of the product? And, I think over time, in the last 20 some years, that I've been trading and looking at natural gas, initially when there would be a threat of a hurricane in the US Gulf, people would tend to run and buy crude oil and natural gas, and prices would rally. Over time, what people realized is that what actually happens in a hurricane is people generally lose power. And if they lose power, you don't really need the natural gas because you have to turn off the power plant, and you lose power because maybe the power lines went down. So it seems more and more lately people focus on the fact that we'll lose demand. And I think, you know, it's not that black and white. You always have to think about which side of the equation are you losing. So if you're losing demand, of course you expect the commodity to go down, right? If you're losing supply, you expect the price to go up. So in your example about having blackouts, I mean, of course, if you were able to trade electricity futures and you just realized that nobody is buying electricity because of a power outage, you'd sell electricity futures, right? But I don't get the sense that you have that. On the flip side, if most of your electrical generation is supplied with gas or oil, and all of a sudden there's an extended brownout, you would say, or blackout, you would say, well, we're not running as much gas or oil through our generation plants. But I'm not as familiar with, you know, the mix. Do you guys mostly have coal plants or gas plants?
No, it's electricity based on water. It's powered by water, hydro. So.
Oh, well, okay. So then it's, I mean, unless you're trading water futures, right? So then you'd have to focus on the electricity side and whether or not you have electricity futures you can trade, or then take it one step further. All of your chemical plants or any of your other processing plants or anything that requires electricity suddenly isn't going to be able to move that. And you can derive yourself into a scarcity situation, right? So if you have pipelines running through somewhere and they have a pump station and that's going to be turned off, you could, you know, you have to go, you just take the scenario down the line and find out whether you're causing an event, it's causing prices to go higher or lower.
So, and can you also extend that to the manufacturing industries that rely heavily on the supply of electricity to get their production done?
Of course. And if you want to translate that as a trade, you would maybe look at the stock, right? The equity of that particular company. And, you know, I mean, will it have a severe impact on some of their targets that they've set out there to hit for manufacturing, you know, or will they just get back up and running and work double time and, you know, not a problem. But it's always good to kind of go up and down the chain and, you know, ask yourself sort of what the impact will be and find the particular area with the most exposure.
All right, thank you for that informative information. What would you say is one of your most memorable trades? And I know you've done this for over 25 years, but you must have one trade that either went your way or it was off your analysis that you still remember to date.
Yeah, I have my most memorable trade was, I think it was 1997 or 1998, and I was working for a company called Aquila, which was an unregulated subsidiary of electric utility, meaning that we were basically trading electricity futures, and we were moving electricity across the country on the power lines because that had just become open. So now people other than utilities could reserve space on the power lines and move power from point A to point B. And it just so happened that the market, I had been short. The market looks like, you know, maybe it was wrong. I had to reverse, book a loss. And then I went, you know, just as long, you know, I reversed and then I got long. And there was just a calamity of events that led prices in the power markets to go from $50 to $4,000, and in a matter of minutes, maybe a sum total of an hour. I booked more profit than I ever expected. And I don't, that there's a little bit that involved having to be good on that one, because I would have lost a lot of money if I'd stayed short. But there's also a lot of it that is, I never expected the market to move that much. So I expected to make money going long, but not make that much money. And I mean, it was a fun day. It's when I felt like a trader.
So maybe if you were trading your own money at that point, you would think of retiring. Just a thought.
Yeah, but then I wouldn't have been able to do the trade, right? I mean, that's the problem. You need so much capital and credit in order to, I mean, the trades are so huge. We're talking, so yeah, I wouldn't have, luckily I don't have that regret, because I would have never been able to do that trade on my own.
Okay. Brynne, some of your work has been published. So can you tell us some of the publications that feature your work and how people can find some of your analysis?
Well, I mean, thank you for your generous classification of it as published. I appreciate that. But I have written some analysis papers that have been posted on either through the Fundamental Angle on my website or Martin Chronicle. I also, publish or post a lot of free data on Twitter, on my Twitter account every day. And I've been on various different podcasts, Chat with Traders, Futures Radio with Anthony Crudelli, Macro Voices. And I'm about to join a group and launch a new website called The Opportunistic Trader, in which I will be contributing analysis to on a weekly basis. And that should be up and running around mid-July. So certainly look for that, opportunistictrader.com.
Okay. That's in addition to your website, Fundamental Angle? Correct. Okay. Have you read some books in trading, and what books would you recommend to, say, beginning traders who want to go into energy trading specifically?
Yeah, so let's see. Books that I refer to a lot in the beginning of my career and that I refer people to a lot, there's two of them. One is called Oil 101, and it's by Morgan Downey. And the other one is called Fundamentals of Natural Gas Trading, and that's by Fletcher Sturm. And they're both fairly old books at this point. However, there haven't been a lot of new ones written. And for anybody that is wanting to get a basic understanding of how the oil markets work, how the gas markets work, these are still very relevant books. So when I always like to, whenever you kind of move into a new business, there's always some jargon, right, or terminology that people use that you're not familiar with. And I think books like that are a great place to kind of start to get yourself familiar with the terms used within the industry. And it will get you started on understanding that maybe you didn't know the whole picture, and there are more places to look.
Okay, so I want to thank you very much for availing yourself and your time for this podcast. I'm sure it will be very relevant to most of our audience here locally and internationally. And yeah, since New York is about to open, I think that should be all for now.
Great. I mean, it's so interesting to be able to talk, to someone from, such a different market. I wouldn't say I've looked a lot. You get so focused on the market where you live.
Uh-huh.
And so I was very excited that you contacted me. So it's been fun. I appreciate it.
Thank you very much. I'll be in touch. I'll share the audio with you when it's done.
Okay, great. Thank you very much for having me.
Okay, bye.
Bye.